Welcome to our JRB meeting. Jamie Craven, former superintendent for DeKalb Schools, has been our chair for a while, and he has relocated. So presently we don't have a chair lined up, and I would like the JRB to consider nominating a person who can chair this meeting today.
Motion to approve Amy Dahl.
Okay, we've got a motion and a second. Discussion. All in favor, say aye.
We'll need to do this as roll.
Oh, okay, yes.
We actually need to call the roll.
Okay. All right, let's call the roll then, please.
Representatives, please state your name for the record when I call the taxing district you represent. City of DeKalb.
Bill Nicholas.
DeKalb Community Unit School District 428.
Cindy Carpenter.
DeKalb County.
Gary Hansen.
DeKalb Park District.
Amy Dahl.
DeKalb Township.
Jennifer Jeep Johnson.
Kishwaukee Community College.
Bob Johnson.
Kishwaukee Water Reclamation.
Mark Eddington.
DeKalb Public Library. DeKalb Township Road and Bridge District.
Craig Smith.
DeKalb County Forest Preserve. 8 present.
Thank you. Got ahead of myself, my apologies. So we're back to the need to appoint a temporary chair. I suppose that was out of order before, so let's call again for a motion.
Motion to approve Amy Dahl.
All right, and a second. Second. All right. Discussion. All right, hearing no discussion, all in favor of the motion, say aye.
To do a roll call vote for everyone.
Oh, that's right, everything's a roll. Okay, thank you.
City of DeKalb.
Bill Nicholas.
DeKalb Community School District.
Cindy Carpenter.
DeKalb County.
I'm thinking yes is the right answer.
DeKalb Park District.
Yes.
DeKalb Township.
Yes.
Kishwaukee Community College.
Yes.
6 yes.
Okay. Well then, at this time, I would entertain a motion to amend the agenda to move the presentation of the forensic audit after item D, public participation. If there is a motion for that.
So moved.
Second.
Any discussion? Okay, and then a roll call vote.
City of DeKalb.
Yes.
DeKalb School District.
Yes.
DeKalb County.
Yes.
DeKalb Park District.
Yes.
DeKalb Township.
Yes.
Kishwaukee Community College.
Yes.
6 yes.
Question, will there be a place for comments from JRB participants at some point?
I believe the JRB participants will be able to, after the presentation, would be able to have a discussion of that. Can we get a motion on item C, which is approval of the minutes from the joint review board meeting of January 24th, 2020?
Move approval.
Second.
And seconded. Any discussion? And then roll call vote.
City of DeKalb.
Yes.
DeKalb School District.
Yes.
DeKalb County.
Yes.
DeKalb Park District.
Yes.
DeKalb Township.
Yes.
Kishwaukee College.
Yes.
6 yes.
Then we'll move on to public participation, and we have a couple of comments that have been emailed in, but we also have a couple of speaker request forms that have been turned in. So we'll start with the live speakers, and then when we're done with the live speakers, we'll go ahead and read the comments that have been emailed in. So Mark Sharvat, do you want to go ahead and start? Jason, where do we want him?
Yeah. Okay. microphone here, so I guess it doesn't matter. All right. Real quick here, I'm glad we're finally having this meeting, and I'd like to thank our state's attorney for initiating this audit that took place. This was desperately needed. I just want to remind the committee and thank you for volunteering to read the records that were submitted in writing out loud. I think it's important that the public at home knows what some of the individuals who submitted information online be read out loud into the record. 2 words for you. Rita Cromwell. Does that name sound familiar to you? She was the individual in Dixon who basically her activities were not monitored for many years and cost the city millions of dollars. What's interesting about this report is that DeKalb taxpayers were on the hook for millions of dollars as a result of poor practices by the city of DeKalb. $7.9 million. Now, as a taxpayer, I have to tell you, that is very insulting to know that that money was just frittered away. Based on recent census data, that comes to $185 per person living in the city of DeKalb that was taken out of our pockets. I feel like I've been stolen from throughout the years, and I feel many people within the city of DeKalb probably feel the same thing. It may not seem like a lot of money, but multiply that by the 40,000 some odd people who live in the city. The fact that these poor business practices, these accounting practices, took place in the city of DeKalb for 10 years going unnoticed was insulting. Throughout the years, the Joint Review Board had a chance to review these figures. Some members currently serve on the Joint Review Board, served at that time, often in different capacities, and didn't do a thing about it, didn't look at the numbers. Are we not minding the house around here? I do have somewhat of a problem that our state's attorney announced that there will be no charges filed against the individuals involved, which basically, to me, sounds like we are endorsing theft. I think that those who were responsible for these errors should be held accountable through the fullest extent of the law, even if they're no longer with us in our community, those responsible. So I want to find out from the Joint Review Board, and the public probably is asking the same thing, how are we going to make all the taxing districts whole and the individuals living in the city of DeKalb? Now, if you say to yourself, okay, $7.9 million came from tax increment financing dollars, and just those who paid into it, doesn't affect the rest of the taxpayers in the community. It does, because each of the taxing bodies had to raise taxes or account for that amount they were not getting as a result, especially the school district. How many children were cheated out of services because of the large share, 60% of that the school district takes in tax revenue? So I'd like to hear some recommendations from this committee as far as how to make the taxpayers and the taxing districts whole. And also, I'd like to find out what we are going to do to make those who did this in the past accountable. I think it's very important. Now, the city manager announced that there are some initiatives in the audit that the auditors recommended that the city has put in place. I want to find out which initiatives are in place and which initiatives recommended in the report are not in place. I think it's important that these practices that have been initiated and those that have not been initiated be brought out to the public so we know what's going on. I do propose to make the taxing bodies whole to, in the future, starting this year, with tax increment financing, recommend to the city of DeKalb that they zero fund TIF monies, return that to the taxing districts at the end of the year by declaring a surplus at the end of each year until that $7.9 million is made whole. Thank you. Those are my comments.
Betsy Chronopoulos.
Good thing I'm in good shape, that's right. Well, it looks like my big mouth isn't even going to be stopped with the math, so I may as well. Here goes. I'm going to keep this very short because seriously, you need to do your job. The JRB needs to do your job. We worked about a year and a half ago or so, very hard to get the JRB functioning in a manner that they should be functioning, because prior to that, it was not happening. They would meet, whatever, sometimes meetings would be canceled and so on and so forth. We'd check off the box, yeah, JRB met, and there wasn't any questioning going on, anything, for years past. And that's too bad. So things were changed, so you're able to meet more often, meetings are televised, a lot more involvement for the JRB, and that is good. That is a healthy thing. Now you really need to delve in there and do your job. When this broke, when this audit first came out, one of the things that I had suggested was that the JRB needs to be called immediately, a special meeting, so that they can at least begin a preliminary look at the audit. So should the FAC, the Finance Advisory Committee. That's not been done. That wasn't done as quickly as I would have liked, but at least we're starting now. It was also, when the audit came out, the city had a narrative that said there were changes made to the procedures. That's all well and good, but that's not enough. Because if you look at the report and you look at the narrative, one of the things that stuck out to me in the report was that they had, the auditing people, Ernst & Young, had a hard time getting information from the city. So that kind of leaves me a little worried about if the procedures are enough to do whatever needs to be done. People have said, and even Mark has just said, criminal activity, should that be punished in some way? Should blame be laid somewhere? I suppose. But really what we need to go after is the facts. What is it that happened? What caused all of this specifically? And the facts will lead to whatever needs to be done. I believe very strongly that the former Tif attorneys gave bad advice to everybody. I think that's a part of the situation. Maybe those people need to be called to task. Maybe they need to be further investigated so they don't cause further damage for other municipalities. I don't know. You won't know until you do a very thorough and call for an investigation, whether that's going to be done with Mr. Amato's office or the Attorney General's office, or even bringing in a higher factor like the FBI. I don't know. But you cannot be satisfied with just that. Spent $200,000 to get this audit, and it has red flags all over it, folks, all over it. We could spend 2 hours, I can go over each and every point with you right now, but you need to do that. And you need to take this information back to your respective boards, because they're going to be telling you what to do. And I hope that you are taking the time to make sure that your elected officials who you represent are going to be reading this document. That needs to happen. That needs to happen because everybody is at fault here. We all kind of dropped the ball, I think. So we need to fix it and fix it good. And if there's a way to return those monies and make it whole, that needs to be done too. And if some heads have to roll, so be it. Thank you. Thank you for your time.
Before we read the comments that have been emailed in, is there anyone else that would like to address us during public participation? Okay, then I'll go ahead and read the comments that were emailed in. First one is from Misty Hajashik, formerly of 529 Park Avenue. I lived in DeKalb from 2002 to 2019. I paid taxes during this 17-year period. I was also a member of the county board from 2012 to 2019. I tried many times to get some kind of information on how my tax, including TIF dollars, were spent. I read the fiscal assessment and I have a few comments. Number one, this entire document shows that the city of DeKalb was arbitrary and capricious in who got TIF dollars and how much each entity received. It shows a total lack of any procedures or record keeping. I believe that each of the 9 taxing bodies should be made whole and that there should be serious oversight on how the city proceeds. We are talking about millions of dollars that has been misspent. Number 2, page 23, section 6.5.5 says, in part, section 11-74.4-3 of the TIF Act stipulates, quote, unless explicitly states herein, the cost of construction of the new privately owned building shall not be an eligible redevelopment project, end quote. Did Bemis, Cornerstone, and even the newest Pappas development, the source of Nick Cronauer's lawsuit, qualify? Number 3, page 25, section 6.5.2.2, TIF eligibility, quote, we were not provided with a contemporaneous analysis establishing TIF eligibility of the Bemis incentive, end quote. And it also says, quote, the information provided does not enable us to clearly apportion expenses between renovation and new construction, and we are accordingly unable to conclude that the Bemis development incurred $1.5 million in eligible expenses, end quote. Number 4, there is an additional question about the Bemis issue because the forgivable loan goes past the life of the TIF. Is this even legal? This entire document shows that the city of DeKalb was arbitrary and capricious in who got TIF dollars and how much each entity received. It shows a total lack of any procedures or record keeping. I believe that since only 85 items were in the scope of Ernst & Young's assessment, and there are so many items found that are clearly wrong and possibly even criminal, that further investigation needs to be done. I believe that ultimately each of the 9 taxing bodies should be made whole and that there should be serious oversight on how the city proceeds. The second email that was received says, my name is Derek Van Buren. The TIF report should immeasurably concern the taxing bodies. The report details the gross mismanagement of your taxes being diverted to questionable activities, especially the payment of salaries to city employees. For example, the school district paid 18% of the city manager's salary. One of the recommendations highlighted that the city does not even use basic accounting procedures in the accounts payable process for TIF invoices. If the city does not follow this process for TIF, doesn't it mean the city doesn't follow basic accounting procedures for the city's invoices not related to TIF? Scary. Another recommendation is that standard procedures should be used in awarding TIF projects. You only need to look at the last 3 TIF projects to know that the city has no standard procedures. The percentage of the project receiving TIF funds keeps changing. These are TIF funds that could be surplus and be transferred back to the taxing bodies. Finally, the city should provide the public with what recommendations have been implemented. The city posted on its website with the TIF report the following. Quote, the Ernst & Young audit makes some recommendations for process improvement, City Manager Bill Nicholas stated. I am pleased to report that many of these recommendations have already been implemented, but were not noted because they did not exist during the period of the audit 2009 to 2018. The Council's recent discussion on May 26, 2020 of broad guidelines to be followed in evaluating and making TIF awards closely follows a number of these recommendations. Hopefully, the city will provide the taxing bodies and the public the relevant timesheets of the city's employees with payroll rates that are charging TIF. We should have the ability to reconcile the amount charged to TIF from the city's timesheet. This information should be posted on the city's website. Thank you. And if there's no other comments during public participation, we'll move on to the presentation of the forensic audit by the auditing firm of Ernst & Young. I'm sorry, do we have any online comments? Thank you.
If there is anyone with an online comment, feel free to raise your hand or go into the chat box, and we will gladly unmute you.
Okay. It looks like we're not seeing any.
Yeah, one person, the guy in the middle.
Might be Michael.
No, that's a presentation.
Yeah.
Okay.
Yeah, that's who.
That's our Ernst & Young presenter?
Yes, that's our Ernst & Young.
I can introduce him if you want.
Okay. Bill, if you our presenter.
Yeah, I think Michael Stubbery, this is on the line and in the middle of the screen there. Michael's a partner with Ernst & Young and was the leader of the team that did the forensic audit in the city of DeKalb, and he would like to summarize their approach and also findings, and then there'll be some time for questions and answers. Michael?
Thank you. Can everybody hear me okay? If you're getting an echo, I can wire up.
You're fine.
Okay. I'm going to be referring to some notes, so I'm going to move around a little bit. But very, very briefly, as you're aware, we conducted the assessment on the TIF funds, and our scope of work is set out. Our scope of work and the procedures that we perform formally are set out. I'm just going to briefly run through our approach and the procedures we performed. I'm going to touch on the executive summary of our findings. That flows quite naturally into the recommendations. They flow pretty naturally from the executive summary, and then we'll have some time for Q&A. So very briefly, our procedures that we performed are relatively, structure is relatively standard for an assessment such as this. I mean, we begin with a basic information gathering about the environment to understand the TIF program. We called for, very, very basic information like the annual reports and the TIF plans and ledger accounts and such like, and conduct a basic, analysis on that data to identify areas that we're interested in for more detailed testing. And then at that point, the procedures sort of bifurcate. We conducted, as was mentioned by one of the members of the public, we conducted detailed transaction testing on some of the transactions that we identified, the bigger ones, the ones that were more interesting to us. And then also, at the same time, continue to do, more detailed analysis on, on areas of interest. And when those procedures were complete, we wrapped everything together. The report's very detailed, and I apologize for that, but just given the nature of the public interest in this matter, we just felt that we needed to, set out in a lot of detail what we did and what we found, so that an interested reader could find the detail that they wanted. So briefly running through the executive summary, I would say at a very, very high level, if one looks at the the TIF annual reports and the various statutory requirements in the TIF Act, we're comfortable that in the main, all the various requirements they have around accounting and analysis and disclosure and certification and submissions, they were met for the period 2009 and 2018 that we looked at. And that's set out in detail in one of the very, very first annexures at the back. Our first key finding, which has already been touched on by comments from the public, was this issue of the general fund transfers. I think it's fair to say that this issue was no secret before the audit commenced, and there was concern around the general fund transfers. Obviously, it's one of the first things we were asked to look at, and one of the first things that we did look at. And the analysis that we conducted identified that if the methodology, the recent methodology that had been adopted to calculate the administrative cost transfer had been applied across the history of the scope period, the amount, the amounts that were transferred, the 7.9 million transferred, actually exceed the amount that could be attributed by about almost $6.5 million. The second issue that we addressed in terms of an analysis of the high level bigger dollar issues was the issue of the surplusing. There's an IGA back in 2007, which dealt with surplusing, and there's wording in the IGA which defines, how the surplus is to be calculated, and the specific wording identifies that the surplus would be 50% of the property tax revenue increment generated within that central TIF district. So, by accident or by design, the wording of that IGA limits the surplus to the property tax increment. The distribution that was actually made, it was calculated on, it would appear to be calculated on 50% of everything that was collected, resulting in a $1.9 million, potentially $1.9 million over surplus during that period. There is a second area of contention around the surplus distributions, and that really turns on, whether the surpluses should continue to be calculated, having regard to sales taxes during the time when sales taxes were no longer being collected. And that has a big impact on, how the surplus funds are directed. And the calculation was based, on the view that the surplus calculations should be based on cumulative collections, and that would include the sales tax component. And that was the methodology that was adopted. And if that methodology is correct, then fine and good. If the methodology was adopted that the sales tax portion ceases when the sales taxes are no longer being collected, that would result in a significant difference in how the amounts are distributed. Another $4.5 million would have gone to the county collector, and IDR and the city would have received 2.4 and 2.1 million less. That issue is complex, and it really turns on a legal interpretation on the provision of the TIF Act. I've read it repeatedly. I've read the paragraphs over and over, and it's difficult to tell, which way how that section was meant to be interpreted. So, if it matters, it would probably be an area where the city could get advice on that provision. Then we get to the more general observations, some of which have been touched on already. It was challenging for us to perform the audit. We want to be clear that we struggled to get documentation, and it was difficult at times to find a standard or a set of procedures which we could audit to. But part of that issue is a historical issue, and I do want to be quite clear that while we were conducting the audit, we got a high degree of cooperation from the city, and Bill and Ray and the team worked really hard with us to identify and pull the documentation that we needed, and that certainly a lot of what we were dealing with in struggling to execute the audit was a historical problem, a historical lack of process and documentation. So, in our findings, we call attention to the fact that there isn't a clear policy document or set of process documents and controls around approving and paying vendors or the owners of the redevelopments, and there was no single clearly articulated standard, that we could work to. It's one of the challenges I suppose we had in performing, the audit. When you do an audit, you audit to something, and this was a little difficult because we had to, in conjunction with the city, had to reconstruct some of the records to find out where we came out. The payments, which we sampled, which have also been referenced, there was documentation, a lot of significant documentation was missing. We identified, 16 of the 85 invoices were missing. Proof of performance was the biggest difficulty we had. The expectation should have been created that proof of performance needed to be provided, by the recipient of the funds, and that primarily, besides for being, healthy and prudent, to confirm proof of performance. I think in the TIF context, it's important just also from an eligibility point of view, because it does help identify very, very clearly, what work was performed, whereas an invoice may not have, sufficient detail to identify what we needed to identify. So proof of performance is good housekeeping, but particularly for TIF funds, where there's an eligibility question, it's important. Unfortunately, we did struggle a little on the eligibility side. As was mentioned earlier, we identified some of the areas, some of the bigger developments like Cornerstone and Bemis, where there were large new construction components of that. We were a little bit hamstrung because there was no contemporaneous analysis conducted at the time to ensure that the eligibility requirements were met. So, we were left with transactions and documents backing up the transactions that we had to kind of filter through, and I try to identify costs and separate them between renovation and new construction. And obviously with the passage of time and with the availability of documentation, it's not something that we could do with complete certainty, but that's definitely something that needs to be addressed going forward around the eligibility side. We touched on also, there was also commentary about the range of support that was provided under the RDAs. There is some reference to guidance and practices, but again, it's not a clearly articulated standard which would help. Which would help just to ensure that the funds sort of conform with with the standards that that you want to apply to them, and how the funds to be used. And finally, there's this issue of the forgivable loans. The forgivable loans do extend beyond the expiration of the TIF funds, and it's just not clear how the taxing districts could enforce any rights under these loans after the TIF expires. These translate almost directly into the process improvements that we recommended. I'm going to go to the process improvement section. I'm not going to verbatim repeat what we've discussed up to now, but just identify a couple of thoughts that maybe go a little bit beyond what's immediately apparent from the executive summary. So we've touched on procedures. We've touched on maybe establishing a framework and documentation requirements and such like. One of the things, maybe the last point that's maybe matters more than anything for this group. When we conduct audits for clients, there's usually a stakeholder that requests the audit. We report to the stakeholder, and the stakeholder has, a stake in ensuring that the remediation plan is implemented, and there's a timeline, and there's milestones that need to be met and such like. And I think this group should consider a dialogue with the city around the remediation plan, getting buy-in on the remediation plan and steps and timelines, and then the city in turn could commit to the Joint Review Board to report progress against the remediation plan, and then to the extent that it needs to be signed off as they complete, sign them off. But I think that could give this group comfort, that they have stake in the remediation, and give the city some concrete milestones that they can work to. So I'll pause there and at this point probably take questions if that's convenient.
Hi, this is Cindy Carpenter. I'm with DeKalb School District. Can you explain the process of forgivable loan? I guess I'm just a little confused about how that works, and when the TIF does provide that to a project, what is really the process for that, as well as the payoff, I guess. For forgivable loan, mine means it's basically just, it doesn't have to be paid. It's like a grant, but I guess I'm just a little confused about the process.
Okay, so the way I understand the few that we looked at was that the award is made contingent on the incremental tax revenues being collected over a 20 or a 30-year period. And to the extent that those taxes aren't collected, they fall short of the grant, then the grant remains a liability of the recipient. So basically, the award is made, and then it's amortized down as the incremental taxes are collected, and hopefully amortizes down to zero, and then there's no liability. That's the way I understood them.
So basically, as the taxes collected, that would be the taxes collected within the TIF based on the increase in increment for that particular project or that property?
Correct. That's the way I understood it.
Okay. And do you know, were there amortization schedules prepared for those loans?
They were not prepared at the time that we were there, but we did have conversations with the accounting team, and they confirmed that they understood that requirement was there, and that they would start gathering the data and calculating the amortization.
Thank you.
I have a question, if I might. Gary Hansen with DeKalb County.
Yes, sir.
And this has to do with the administrative expenses. And on page 12, you mentioned that you are using the 2018 methodology and applied it backwards. And I was just wondering why you chose 2018 as opposed to 2019, which is the current methodology, because that all changed when Mr. Nicholas became the city manager. And that would be substantially less cost over all those years you computed.
I think we chose 2018 because it was the last year in our scope period. I don't think 29 was in our scope. I think our scope was 2009 to 2018. So while 2019 would be a good one to look at, because hopefully the more current information, the better it is. But I think I limited the team to what fell inside our period.
I have one other probably quick question. What is a concern we raised in advance of the audit, and that was in 2014, there was a loss of investment money through the IMET program. And that was written off in 2016 on a Tif report. It's about $288,000. So in the scheme of this, it's not huge dollars. But coincidentally, that write-off was 100% Tif money as opposed to a proportionate share of all the city investments. And I was just wondering, did you look at that at all and decide it wasn't material, or did you not look at that?
I don't recall whether we looked at it. We may well not have looked at it because I'm pretty familiar with our work. It might, just in the course of doing the initial analysis and analytics to identify where we were going, it may not have come up. I mean, I don't want to say it's not material, but we were led by the analytics, and we went there, and we may not have addressed that issue.
Thank you.
Hi, this is Cindy again with the Cal School District, and just a kind of a follow-up question regarding those forgivable loans. I know you mentioned in the audit you're not too sure what happens with any unpaid balance once the TIF has expired. So is there any, do you know if there's any guidance in the TIF Act regarding that, in terms of, how can you basically have a loan out there that, once the TIF expires, 20 years from now, and there's an amortization schedule, again, like you said, how do we monitor that as a JRB? What is still owed, or should any balances be paid at that point when the TIF expires?
That's a good question. And, I suppose I don't know all the answers to that. I don't know if the TIF Act provides guidance on these loans. I do know that the amortization should take place. These larger awards that were structured as loans, should be identified. They should be put on a schedule. They should be amortized. And to the extent that the taxing districts are at risk when the TIF expires, some mechanism needs to be put in place to secure the rights, going forward on those forgivable loans. So I can't answer all the questions, but I think it's a good question, and I, to the extent that some legal remedy can be put in place that secures the rights going forward, if the TIF fund can cede those rights to a party, that would probably be prudent to see if that can be put in place. I don't know if you can force the recipient to pay, when the TIF fund ends. I'm guessing they have rights too, and they entered into a 20 or a 30-year forgivable loan. But if some mechanism can be found to secure the rights of the taxing districts under those loans going forward, that would probably be prudent.
I could address that.
I believe the city manager can address that question.
Michael, I'll defer to you on what happened in the period 2009 to 2018, and I didn't do the work that you did. Currently, those forgivable loans carry a mortgage, so if you had $1 million loan and over that term you had created, the property had created a tax benefit of $950,000, and you hit the midnight of that loan term, then that $50,000 you were short is immediately due and payable. So you basically have a mortgage, which is one of the documents. Now that's today, and I don't know if we could read that back, Michael, but then it becomes immediately due, just like a bank would call a mortgage.
So the question, and maybe Cindy can clarify, but if the question is, if the TIF has already expired and that loan comes due, how do the taxing bodies get our money back?
That's a good point, and that is a very valid concern that Michael and his team fleshed out. So now we're in TIF 3. We can go 20 years, but those loans that were made in the last, say, 5-10 years of TIF 1, as an example, without another mechanism, I don't know what that would be, an escrow, a bond, I don't know what it would be, would leave us theoretically without recourse at the end of that period if it wasn't fully paid.
Cindy, was that part of your question about the forgivable loans?
Yeah, it was, and I guess that kind of brings up a question in my head as well. When TIF dollars are awarded, are most of them done as forgivable loans, or is it, what percentage are forgivable loans and what aren't? And, I guess my concern now is how many of those are out there if these amortization schedules were not prepared? How do we know how much it may or may not be owed? Just trying to get an idea of the scope of that.
So Cindy, I can't answer that question completely because we looked at the bigger ones, in terms of this issue. So that's probably an exercise worth doing to also get back to Bill's observation. Another complexity that needs to be, built into this understanding is that some of these the bigger projects involve commercial financing as well, and there may be some subordination agreements in place with the developers to enable them to secure the commercial financing. So that's another dimension that also needs to come into this. To what extent there's been a subordination of some of the security.
Subordination, you mean that if their bank loan or their commercial loan is basically the first mortgage and then the city is second? Does that make sense?
That's the way we understood it. I think we saw that with one or two of them. We saw that there was a subordination agreement in place to enable the commercial financing, which I understand from the TIF specialists that I work with, that's not abnormal. But it's certainly something that needs to be, considered as this forgivable loan issue is addressed.
I believe the city attorney had a statement to make also in relation to that.
The TIF Act, rightly or wrongly, does not require security with TIF assistance. I know several municipalities that don't. It's not a good practice. I'm sorry, can it not be heard? Or just a little louder if you can. Yeah. So the city, at least its recent practice under my administration, or under Mr. Nicholas's administration and during my tenure as the city attorney, has been to have these forgivable loans which can be converted into notes or mortgages based on, as described earlier, of how they would work. Now, there's nothing in my opinion that says that they can't exist beyond the tenure of the TIF, and I think the way that you would interpret the amount of money, so let's say Mr. Nicholas's example was $1 million for the TIF assistance, and you had the forgivable loan for the $1 million, and let's say over the year of the loan, right before it came due, it was $950,000, and let's assume that it was past the year that the TIF had expired. You could still interpret the security agreement as being forgiven based on what the initial tax increment was, what the initial finance, what the initial property increment was at the time of the forgivable loan, even though that TIF district has since expired, and it's a liability that the city can then enforce upon the grantee itself and recover if it wanted to. So It is, that security instrument is independent of the Tif Act, and whatever, revenue would come there, but it's tied to it because, it's given in consideration of the Tif money. That would be the reason why you can't have an amortization schedule is because you don't know what the Tif increment is going to be in the future. But what you should do, and what I believe the city is doing under Mr. Nicholas, is that once we know what that Tif increment is each year, we are carefully accounting that and applying that to writing off the amount of, each forgivable amount of the loan. If that raises more questions, if that helps resolve any questions, I'm happy to answer. Yeah.
One question, who would be the recipient of, assuming there was a clawback at the end of that 20 years or whatever?
The city would have to enforce it. So right now, the taxing body, so let's say there was no security instrument whatsoever, and the city issued a TIF incentive, and the property value went way under, right? There's no, in my opinion, there's no legal standing of the taxing bodies to recover that money, right? And if the city didn't have any security interest, there would be no ability to recover that money either, right? It just is what it is, unfortunately. It was a bad economic bet. But with the security interest, the city is the party to that security interest. They would enforce it.
Then they could choose whether to distribute that back onto taxing bodies or not.
When they have the secured interest, yes.
I have a follow-up question to that. Again, I'm sorry, this is Cindy. The previous, Bill mentioned that now that is what they are doing. They're getting security interests for these forgivable loans. So past loans, those security interests did not exist?
I can't speak to the past ones. Yeah.
This is a longer discussion probably than we have time for today, but and Michael, please chime in here, but in my retrospective review since I've been city manager, it seems that we went through an interregnum where there wasn't much, and then as the larger projects arose in 2017 and 18, Cornerstone, Plaza DeKalb, there was more rigor in the TIF agreement that had to be executed between the private party and the city that included this clawback option tied to a mortgage. But I can't speak to, I'm not familiar with the Bemis agreement and other agreements in the past.
Well, I can at least partially confirm and also partially disclaim, we didn't look at this issue end to end. We addressed it on some of the bigger agreements, and Cornerstone and Bemis spring to mind. Those are some of the bigger, more recent ones where we saw this provision. So I can at least partially agree with you that the bigger, newer ones was where we saw it, and it at least minimally did not come to our attention with some of the older, smaller ones.
Thank
While
you.
we have, sorry to interrupt, Cindy. While we have Michael here, I guess, can you talk a little bit about if your firm has done audits similar to this on other municipalities or other entities? Have you seen things in place that would help document the process for these forgivable loans? Because as we look at this as the other taxing bodies, it's going to be in the hands of the city, but how are we informed as taxing bodies? Have you seen other communities that have in place that there's an annual report that's included in the annual TIF report, perhaps is something about the status of these forgivable loans, so that it's not just forgotten about in 5 to 10 years, but that all of the taxing bodies are also aware of what the status is of these forgivable loans, if that makes sense?
Yes, so let me answer that in two pieces. Off the top of my head, I don't know, but one of my team members is, was a person that was involved in all things TIF for many, many years. I can ask her if what she's seen in her experience, and I can get back to this group in some way, or get back to Rick with that, and he can make sure that it's distributed to the group. I can ask that question of someone who hopefully will know.
Thank you.
Maybe I can tell you that the FOIA is a mechanism to determine whether the city is actually accounting for those, forgivable loan status. I don't know whether that would be required to be reported under the TIF annual audit report like you were saying.
Yeah, and I guess I'm looking for something that's a little more proactive on behalf of the city and the JRB than, because yes, the FOIA is definitely but that's their. Right.
I think a good recommendation would be to have those reports to the JRB, right?
If that's some information that's readily available and that the other taxing bodies would be interested, but.
Again, and Michael pointed out, the record keeping was spotty and hard to pull things together, not just by way of receipts and invoices and such, but also annual fiscal accounting of the TIF increment and so forth. But I'm happy to say, and I think anybody who deals with property taxes knows, and you all do, that this is not exotic because it's tied to a parcel or several parcels, right? So you don't have to see the whole TIF, every parcel in the district to know what that one parcel was supposed to be generating as a result of this reinvestment and rehabilitation. Maybe that's a conversation we can also have. I think right now what the council said is we're going to really finely calculate this TIF loan, that we're calling it for the larger projects that aren't facade loans or something like that. And that's going to be tied to what we know. We can get to some county tax records, township records, and so forth to know what the base EAV was here and what the incremental gain was in terms of EAV and resulting tax generated, property tax generated. And so the universe of variables is fairly fine, and it's not that hard to do. The problem that Michael and his team had over 10 years was the whole universe of 3,000 parcels and all of that, and there wasn't internal record keeping that could have given them something to, as Michael said, audit to, in addition to the policies that seem to be lacking.
Question. You talked about EAV and then tax. If tax rates change, are the amortization tied to EAV or to actual tax receipts?
I just want to be clear here when I spoke about amortization, and the city attorney kind of drew attention to it, if not slightly obliquely. We're not talking about an amortization schedule going 20 years into the future that the grantee needs to meet. We're talking about an amortization schedule, an amortization calculation that's just reperformed each year as the increment comes in and the liability can be incremented downwards. So it would just be an annual analysis for those pool of forgivable loans, just to calculate, what increment was collected and work the liability down.
Did that answer the question you asked? Do you want more of an explanation?
It will change, Bob, you're right. There's a base EAV, which is established in the formative year of the TIF. And the whole point of the TIF, if you can't raise the EAV of the property, you've made a bad guess or a bad commitment. And I dare say one thing that wasn't exactly the focus of the forensic audit, but what comes through to me as now a practitioner in the TIF is the fact that we we missed the chance for over 10 years to do good projects. Some were good, but all of us together, the city did 2 sweeps of cash from the TIF. One was to feed the general fund to pay for salaries and things. Arguably, everybody was suffering after the housing collapse and so forth, but not everybody did this. We did this. And in addition to that, all of us together are complicit in this respect. In order to extend TIF 1, I wasn't part of that conversation. I would have voted against this. We did a deal. And the deal was we're going to take 50% of the annual increment, not just what isn't put into projects, 50% of that increment. And instead of thinking about how we want to put it into projects creatively, we're just going to put it in discretionary income for all of us. So the city made out twice, but everybody else made out pretty well too, to the tune of $35 million. That was the cumulative over 10 years. Actually, it's a little bit off, Michael. You were 2009 to 2018. The revenue sharing started in 2011, went through to the present. But 10-year period, $35 million. So as I drive home every night, and this is my last comment on this, and we should talk about this so that it guides us in the future. And I drive up 7th Street from Lincoln Highway, and I look east. Everything out to Peace Road was part of TIF 1, not just the airport. And as you look at that area, that was begging for redevelopment. Hundreds and hundreds of acres. And what have we done? And we never get to do that again. That was why we did TIF 1, as much as anything else. We've got factory buildings out there that will stand until they go to dust, because there's nothing left to spend, or to use to spend. So that's another thing that wasn't part of Michael's focus, but as we go forward, I think one positive thing is we didn't do that sharing. We have a very small TIF 3, and we're cutting down TIF 1. This is the last active year, and then next year there's an accrual, and then it goes into dispersal in 2021. But so we lost a chance. Other TIFs in the state of Illinois are focused on projects. This JRB that I've known is focused on, let's do good projects. Let's build the incremental value of the assessments in this TIF area, and thereby the town. That's the future, and I regret, as an administrator who's inherited this problem, I regret it mightily every day, because people come to me and say, can I do this or can I do that? And I'm thinking, well, yeah, we could do that, but that's this little pile here. What about all that? We'll never get to touch that.
Bill, I'm going to jump in, if I might, take a little exception to your discretionary money that the taxing bodies enjoyed over those 10-year period. We would have had 100% of that money as discretionary for our general funds, except we agreed voluntarily to extend the TIF 10 years in exchange for giving you 50% of the money. So I think that could be looked at 2 different ways from what you just said.
No, I don't disagree, Gary, but here's what I would say. If we can't do the TIF right, then let's just fold it.
No,
I mean, that was the alternative we had, right?
No argument.
And then you could have all the money that's coming to you now. I just think it was, and I'm not blaming the other taxing body, I'm just saying it was a deal that was cut, but here's the result, and we can't go back, but it's good, it's a heck of a lesson to learn for the future.
Are we still taking comments on the audit, or?
We haven't moved on to the next agenda item, so yes.
Well, I didn't know if our presenter left or not there.
He's still with us, but not on the screen, but he's still here.
Well, I just want, I guess mostly probably for the record, but I take exception to this sales tax surplus that what got paid to the state and the city. I really think that was clearly should have stayed local. And I don't think we can jump over that number of $4 million that probably should have been distributed out to the taxing bodies. I note there was a letter back in 2016 from the state to the city saying they sent the money back. We don't think we should have it. And, and yet the city insisted. I find that alarming. And I have yet another small question for Ernst & Young. And I don't necessarily expect, unless you handle this piece of paper, you might have caught it, but as we went through the reports, I think it was in 2015 that the surplus I went to the state of Illinois, you recorded on your table, but there was a second payment that year of $53,000, and there's no mention of that. And I don't mean to set you up with that question unless you handle that piece of paper, but it seems like that was a significant money too that's just not accounted for.
I will concede. Let me answer the second question first. There was a reconciliation process that we went through to identify what was surplus and not was surplus. The amount that you're referring to actually does ring a bell in my memory. I can't tell you exactly definitively how we came to treat it one way or the other, but that table that's in the report, that was, we thrashed that out backwards and forwards over a couple of weeks because it wasn't easy to get to that number. So I don't want to sound defensive, but that 52,000, I am familiar with it, and I do know we looked at it, and but I can't tell you exactly what we thought and how we treated it. Okay. To get back to your first concern, I mean, I understand the observation you make about the $4.5 million and how jarring it feels to be paying out surpluses to sales tax surpluses when sales taxes aren't being collected. But I do think that it's important perhaps for this group to take a look at the provisions of the Act and get guidance and legal advice on the interpretation of that particular section, because I have repeatedly read it, and it's not easy to see what the legislature has in mind. I mean, I can understand, for example, if you were to collect TIF money over a 20-year period, and then, on the 21st year that you cease collecting sales tax, if you distribute a surplus in that 21st year, someone could argue that sales taxes played a big role in getting to that accumulated surplus at that point. So I suppose I can understand both arguments. I can understand your argument that it's jarring to pay when you don't collect it, but I can also understand the argument saying you've collected over a period of time and that surplus actually is a blended pool of everything that's come before.
Thank you. I have another unrelated question. On page 55 in your Appendix A, you built a table of certifications and who is responsible for signing off on various things. I guess my question is, as you look at that, are you glad Ernst & Young's name is not on that report?
I'm maybe not going to answer that question.
Thank you. You maybe did.
Well, before we move, I think we need to discuss more of the high-level impact of this information and what it means for us. I think part of, we've heard from the community turning to us, looking for us to be able to play some leadership role, and I think that's understandable on their part. But the reality is that some of those recommendations, even some of the ones we've heard today, are so outside of the scope of what a JRB is empowered to do or should be doing, has authority to do. And, you know, we're not going to be able to do those things, but it doesn't mean we can't discuss some of the things that we would like to see. It is our job to advise and perhaps make requests. I think something along the lines of what we were discussing prior, like if there are, you know, we heard at the outset of this that every statutory reporting guideline was met throughout this entire thing. That means anybody sitting in these chairs doing the jobs that we're doing, were given information that met the state standards for what that JRB needed to see. So the idea that we are going to be able to play some kind of investigatory role into keeping the city honest is not only an impossibility, but we don't have the authority to do that. What we would like, I think, through our conversations is saying, don't make it so hard on us. If there's reporting that we need to see, like per the, you know, no, don't make us fill out FOIA requests to get our hands on the documents that would tell us about long-term loan, forgivable loan repayments, who's owed what money, and those kinds of things. For the people who step into our roles next, they shouldn't need to go get, you know, a PhD in order to figure out the standing of all of the money that's out there via a TIF. But I think also, and I know we have the state's attorney here, I have a little bit of concern that even the way we're going about this conversation gives the impression that this is an intergovernmental undertaking. It is not. It has intergovernmental impact. But this is a municipal endeavor. We can and should play an important role in making sure that what we have in front of us is enough information to keep abreast and apprised of all of the TIF expenditures, projects, et cetera. But we do not weigh in or give input on those. And I think it's important to make that distinction because, of course, with authority or responsibility comes liability on the other side. So I want to make it very clear that we are not fully empowered to do some of the things that I think that people are calling for us to do. And this is not the first time we've had that conversation either, but perhaps this would be a good time to clarify the appropriate role of what falls under the council's purview, the FAC's purview, and what would be an appropriate course of action for this board regarding some of the concerns that the public has asked for.
I might just say, I think we all agree, all the representatives of the various taxing bodies, and the city agree on this point. Thank you for that, which is, at least since the beginning of 2019, that the city, by this statute and by common practice, holds these funds in trust. We're party to an understanding that the city will use this money that otherwise would flow to the various taxing bodies for their purposes in order to redevelop certain areas that meet blighting characteristics or something defined in this TIF Act, which will in turn generate new revenue through taxes for the other taxing bodies, right? So because of that, and maybe this wasn't the mindset before, but this is my outlook, this is, I believe, yours. The more informed you are, the better you can inform your boards, and the better the public is informed generally, because we broadcast, or have to this point, we're in transition, we lose some electronic capabilities, but we're doing our best to make sure that everybody who is interested can know what is going on, what projects are likely to happen, even though this board has said we don't want to tell you what projects they do, but we're curious to know. And then, and as Cindy was asking, and as Gary was asking, well, how do we know, what's the accounting at the end of the year to know that all of this was in line with the goals, council's goals for redevelopment and our expectations for the use of what otherwise would be our money? I'm speaking for you when I say ours. So I think that you're right. This is, and that's above and beyond probably what the statute requires, but it's, if we want to be inclusive, which we're trying to be, we want to be open about it and transparent, that's what we have to do. That's what I know the mayor's asked me to be and to do, so. And I think the attorney would agree with that.
So I guess that leads to what do we do? What do we want to see? I agree with everything you just said. I'm certainly not advocating for less information. I just want to make clear that, you know, the scope of what, you know, even reference was made earlier about making sure that we can go back to our boards to understand the action they want us to take, already is a, you know, misstatement of the role of the JRB in that we don't take action. The one vote that we've taken was for the creation of the TIF, and even then, there's a reason why we're not asked our opinion of whether we like it or not. We're asked whether the plan put forth meets statutory guidelines, and that's it. Because of course, it's not hard to imagine when it comes to being entrusted with dollars for our taxing bodies, I can't imagine a project that wouldn't call into conflict giving away our tax dollars. We'd always vote no. We'd have to vote no. That's why you don't ask us those questions. So I think it warrants what we as a board feel that we, you know, recommendations that we can encourage the city to take when it comes to, you know, like one of the things we came up with before ended up being rolled into the Chapter 37 amendments that I think have made a big impact on the approach of TIF. I think we can all agree that the lack of oversight that, or maybe oversight's not the right word, but accounting practices and things like that, well, as was already mentioned, we knew that had shifted and a new undertaking and a dawn of a new day on that was undertaken before this even commenced. So what is it that we are looking for? What is it that we need to ensure that we feel comfortable with what information we're receiving to do the job that we have to do?
May I just make a suggestion?
Sure.
This is where I should listen and not say, but, so, this meeting has been deferred, right, for 3 months now, because of COVID, and I'm glad we met. I'm glad Michael had a chance to present. The next meeting, subject to your approval at the end of the agenda, is July 24th. That would have been the normal quarterly meeting that we have. And I think between now and then, as you have questions, if you want to give them to me, I'll try to prepare answers to them as I can know them, or will know there's work to be done. And I can tell you, between now and then, a couple of things can be done administratively by the city. One of those is to the point of the sales tax TIF that I'm just happy to embrace the idea of reevaluating where we are with that. And this is the first chance we've had to discuss it since the audit called that out, and I think it was appropriate that it did. Cindy spoke to the idea of, you know, what are these amortization schedules? Well, I think Cindy, better than me, knows. In our case, because it's variable, the incremental gain in a year, you can't say, well, you got to hit 10,000 a year for 10 years, 20 years, whatever. But at the end of the year, we always know where we stand with the properties, or within a month or so after that. So we can provide those schedules, and we go back as far as we know there were projects that called for a forgivable loan, and so forth. So I can bring some of these things forward to you. If I don't have the exact answers, I can say, here are the areas that we need to clean up and so forth. As Michael said, and as you've read this, and I know not as much as Ray Munch, who was our everyday contact with the auditors, but I know from meetings that I have with them and talking to Ray, there was just absences of detail, so we can't churn those, we can't invent them. And if I go back and look now, I won't find any more than the forensic auditors did. They were very thorough. We looked in every box and every electronic file, and we found everything we could. So I'm not going to be able to find more information, but we can present information is relevant to current ongoing projects.
I think it would be helpful to have a list of projects from the previous time period and those that have been awarded in the since 2018 that include forgivable loans and kind of what the status is of those. I think there've also been some questions that came up in the audit related to record keeping, and so I think knowing and being able to have in front of the JRB what are the new procedures and protocols that are in place? What are these developers being asked to provide, and how is that being tracked, and how do we know that it's there so that if there are things that are foiable or there is an audit, that there's that accountability. And I think what's that process look like?
I'll give you that, and maybe we'll, since a lot of this is electronic now, we'll show you, maybe we can queue up one of our server files, and we can show you how that happens. You know, what's the bucket and the sub-bucket and so forth that we account for.
And then, maybe for the ones that were either moving toward, the recommendations, I'm sorry, that's what I was referring to. The recommendations that are in here that are not yet implemented, maybe a discussion on what you're looking to do, how you're looking to incorporate those recommendations, and where we're at with those would be helpful, I think, to know. Or if we're not doing them, why aren't we? Great.
Also, could we include on that list information regarding any debt that was secured by the city for TIF dollars, or TIF dollars that are being used to pay down some of that debt for those bonds? And as that relates to, you know, now with the TIF 1 expiring, just not sure how that flows.
Yep, you can do that.
Thank you.
Are there any other questions or comments based on the presentation of the forensic audit that anyone else on the JRB wants to make?
I guess I'd like to make a final comment, and I appreciate these last comments looking forward and seeing that we have some good things in place and can watch things going forward. However, this audit puts a big item in front of us, and that's a lot of money that went not where it should have been. And I know each of us sits here with a different perspective. For some of you, your boundaries are very close to the same as the city of DeKalb. So when we talk about moving money around, it's really from one pocket to the other. You know, you can decide whether that's important. But representing the county, 75% of the value of the county is not in the city of DeKalb. So those taxpayers have really subsidized this, these errors, should we say. So I have to look at that perspective going forward. And I just think it's only fair just to let you know, I can't look at this audit and just simply walk away and say, well, we got to do better. I think we still have to look at where this has left us. Thank you.
And I have a comment to that too, similar to Gary's. As a school district, we're in the same situation where we encompass more than just the city of DeKalb, obviously called Malta and Cortland, and it has affected obviously all the taxpayers within the scope of our school boundaries. So I would say we're in the same boat in terms of, you know, we know now what at least the portion of the dollars that were put through as administrative costs, and how is that going to be rectified, or how do we move forward with that? So just wanted to put that out there as well.
And Kishwaukee College has an even larger district than all the rest. Our students made up the difference. Our budgets were short, tuition went up, so it was paid by students from the entire student body over that time period.
I hear you, but I'll repeat what I said earlier. However the agreement was struck and why and what the motivations were, all taxing bodies, including the city, have been using TIF dollars for discretionary purposes. That's a fact. It isn't fiction. And if we're going to unravel this, we need to look at that too. Was the money put into capital? Was it put into salaries and wages? Fund fair? I don't know what it was, but it didn't matter. Nobody asked. Nobody was required to explain. But that's been done. It's a shame that we all have that the TIF has not been used the way the TIF Act anticipated it to be used. So I think that's one, we'll chase our tail on this one for a long time, if that's where we want to go.
I'm sorry, are you
We probably have to see where the TIF dollars were spent. I think every taxing body ought to be able to show that.
Are you saying that once, I assume you're referring to surplus funds?
Yeah.
And you're suggesting that once funds are surplused,
They can be used for discretionary purposes.
right, there's
no accounting by the city on it.
right.
I'm not
And it can be
understanding your
used
point, I guess.
Well,
I'm having, not struggling with that as well.
all I'm saying is, it can be used outside of the city of DeKalb.
But in the case of the road district or any of us, a lot of it is generated outside the city.
Not from the TIF district.
But it ceases to be TIF funds once it's surplus.
That's right. That's the point. And what I'm saying is for the city as well. I'm putting us in the same bag. We used it for discretionary purposes. That's the shameful part.
I don't think we're questioning how the city used their surplus funds. It's how you use the TIF funds according to the TIF law. I'm not following your
I
line
think
of
we
thinking.
all I'm saying, the point is, and this is a fact, that the TIF dollars were used by all of us for discretionary purposes rather than for the private property rehabilitation, which is what the TIF Act required. Whether this was done on legal grounds or not, if we stand out from what was done and look at what the big, the big purposes should be for TIF, we missed the mark, all of us.
Well, if you're referencing, and I know we've had this conversation before, if you're referencing the wackadoo agreement, the 50% cost sharing mechanism that's like, does not exist anyplace else, I'll agree with that. And it was something we talked about when we entertained TIF 3, was by shrinking it and really having a concentrated area, the hope was that it would generate a yield, and instead of sending that half of it away, that we preferred that it was invested more heartily, more robustly, and that it wouldn't have to be open for the 23 years that it could be. But in terms of, I guess I'm still not fully agreeing with the concept that what money we got back as surplus was not TIF money that we were spending, it just was our general fund money, so.
No, it was TIF money that was surplus. And it was just.
According to an agreement 12 years before.
Gary, I'm not disputing the agreement. All I'm saying is, the fact is, it was TIF money that was used for purposes outside the TIF in most cases.
The difference is that they were used for lawful purposes.
For what?
Lawful purposes. I
Gary,
think
I'm
we
not
need to move on.
disputing any of this stuff. I wish I'd been there. This is an argument that's 20 years late, or 10 years
I was
late.
there when they did the extension.
Well, all I'm saying is, if you can't find a way to do your TIF and do the projects and live by the law, then you fold the TIF. And we went a different route, and it served a lot of purposes over a lot of years. I'm not going to dispute the services provided, the purposes filled.
Bill, if I may?
Yeah.
I didn't want to interrupt. Did you have a comment that you wanted
Well, I just have an additional question.
for the auditor?
I think he's gone.
Yeah, I don't know. I'll just make a quick
Yeah, sure, of course.
comment. Yeah, I think going forward, I mean, the city has indicated its intent to wind down, the TIF a year early, which it does not have to do legally, and count that as a surplus. And that amount of that wind down is going to be more than what the audit indicated were potentially questionable administrative expenses. So that is you know, and this goes to the broader question of what should the JRB be doing and, you know, what kind of action can take. That was a recommendation that was discussed and vetted with the JRB. The JRB can't approve that, as you indicated, right? But that is a very good value to this board. And if there's additional recommendations that need to be made consistent with that, then, you know, this is the body that I think is, you know, is well suited to that, and then the city can take the action that it needs to take independently of that. But, you know, I think that is, you know, that is one major step that the city has indicated that it would take. And then it's, you know, as Mr. Nicholas has discussed, we've instituted certain protocols that were recommended by this body, and then independently, and those are things that the city's, I think, that should be a point of discussion and focus going forward. So I apologize for interrupting. Yeah.
No, I think the recommendation that we landed on of taking some time and coming up with, having further discussion on this point. We don't have to have a complete list right now. We're meeting again in a month, and fleshing it out a little bit more is appropriate.
Madam Chairman, if I could interject once more. I couldn't hear everything the city attorney said, but I don't want silence to be interpreted as agreeing with him. I think he was implying that the closing out TIF 1 year early is offsetting all the questionable costs. And if I look at, you know, the current taxes going to TIF 1 is, I think, 6.6 million, something like that. You know, despite somebody using 7.9 million, I think the loss is more like 13 million, and I think there's a big gap yet that needs to be filled. So I just needed to respond and not leave that impression out there that we're all accepting that closing TIF 1 early offset all the costs that are on the table.
I appreciate that response. That was not my implication. It was just that was a step that was vetted by the board, and that was a step that, you know, that the city is currently interested in and committed to taking, and that was the point of the board, is to vet something like that and to have the recommendations. So we should do that going forward if there are still questions about how to, you know, prepare and make taxing bodies whole.
Any further questions or comments? All right. Thank you to Michael from Ernst & Young for presenting, and we'll move on then to the next item, which is the presentation of the first quarter fiscal year 2020 TIF financials, which were included in our packet that was sent out to us. Bill, did you have any comments that you wanted to make about these?
Just that we've been doing this since January of 2019. I think it's an important part, an integral part of how we should be doing business. And you see every dollar that's spent, every dollar that's come in. This quarter, these are already dated, but we don't have it. We'll do a quarterly report on July 24th, if the board chooses to meet then. The second quarterly report.
Are there any questions or comments from anyone on the JRB?
You know, I do have a question. Oh, I'm sorry.
Go ahead, Cindy. Go ahead.
On the TIF 1 report, it has on page 2, the ending fund balance is like about 2.4 million, 2,472,000. Is that how much is actually the ending fund balance in TIF 1? Just wanted to verify that.
Which page are you on, Cindy?
It's page 2.
Oh, I got it.
Yeah. Of the, more of the summary one, the revenue and expenditure report for the city.
Right. And what was your question, Cindy?
It's showing an ending fund balance of 2,472,000. Is that a cumulative ending fund balance, or is that just for that period ending?
I just don't see that number. I'm looking at the revenue and expenditure report for Fund 260.
I think it's the
Yeah, there's two reports related to TIF 1.
go forward another page.
There's one that's more detailed and one that's a summary, which is the one after it.
Okay. And you're wondering,
Cindy, ask your question one more time.
Yeah, I'm wondering,
Is
there's
that the-
it's showing an ending fund balance of 2,472,000.
right,
I was just wondering, is that a cumulative ending fund balance or just for this particular quarter?
yes, cumulative.
Okay, so so TIF 1 has a balance of 2,472,000 in totality.
Yeah, if you look at the budget though, and it's a timing thing, because TIF 3, in effect, is like a blanket over about a tenth of TIF 1, those parcels that are theoretically both TIF 1 and TIF 3 can only be one of the TIFs, so they are now the new TIF, TIF 3. And so there is a required transfer of some funds from TIF 1 to TIF 3. So this is probably at the time, the money, some of this has not yet been transferred into TIF 3, but some of that will be probably. We'll see how it looks in the second quarter, but so that projects can be done in TIF 3.
Okay.
Which now becomes the title, the hat that's worn by that particular parcel or set of parcels going forward.
Okay. So, and
Does that make
so
sense?
yeah, it does. Yeah, but I didn't notice that there was a balance of TIF 3, so maybe maybe the next report will kind of be able to be kind of where the dust is settled to some
So
extent.
TIF 3 would have had practically no balance otherwise, but it now is the generator of the increment for those parcels that a year ago that were considered by the county recorder as being in TIF 1.
And then talking back about TIF 1, which is scheduled to expire at the end of this calendar year, 20.
Right. Right.
Do you anticipate any surplus coming from TIF 1?
Yes. That's part of the, it's 50% of all the increment by the intergovernmental agreement.
Well, I'm thinking in terms of when the TIF expires, not necessarily the 50% surplus, but the surplus, like what we received from TIF 2 when that.
I expect, if we're managing this prudently, we're not spending every dollar that comes in, so we should have a little residual, or maybe more than a little residual. It's a challenge to close a TIF with another TIF coming behind it or portions of it. So we'll probably err on the side of caution and have a little more balance there than we normally would. So I suspect there will be, Cindy.
Okay.
I don't know what it'll be at this point.
Thank you. And just one more question, I'm sorry. Is TIF 2 pretty much done at this point? Has everything been expended?
Yeah. That surplus that was dispersed in, was it February?
Yeah.
Would have been that would have dried up the fund.
Okay.
Should have. If there's $2 in, it should be perfect.
Thank you.
Yep.
So I appreciate these reports that we've been given, then especially the sort of narrative format allows us to digest it in a way that's meaningful and accessible for those people like me who don't deal with TIF on a daily basis. And then these, we do have the opportunity to review all of the costs and all of the expenditures. Maybe something that I would find helpful that maybe other people would, when we talk about something like staff time, there's no way of knowing, even if you wrote it right here next to it, I wouldn't know just by looking at those numbers whether it was, unless it was like 100%, that it's grossly out of alignment with something. We've had people even use the word misappropriation to describe that. that presupposes, one, that there's a hard and fast rule on what expenditures are appropriate. B, that percentage manifests in a way that we, by looking at a piece of paper, would have, you know, the ability to notice that it was grossly out of alignment. And I lost track, am I on 3 or C?
Yeah,
Thanks, I slipped. So I guess what I'll just say is if we could marry the two of those reports and maybe have a scope that we're shooting for, or, you know.
I could make it real easy for you. Well, we can't exactly, the ERP system we have for our finance is what generates these, and the keeping of staff hours and so forth, you notice I've been appending for a year and a half now the timesheets for anybody who's touched a Tif project in. And initially, when I inherited the system, the budget for 19 was done, I think it was the first council meeting in December of 18, and I want to say 100,000. Sorry, it might have been 150, but I think it was 100. Was put in for, you know, down from 683,000 for a transfer from TIF into the general fund. And also, unbeknownst to me, for about the first 2 special meetings that we had a year ago, when that budget was loaded, then he's not here, but the finance director then created a monthly automatic transfer from TIF to the general fund. So I thought, you know, Nicholas had his hand on the wheel, and he didn't, and it was already being, so by the time maybe our 3rd meeting is in February, and I see that already we've made whatever it was, transferred. So we didn't know where we were going to be, and I didn't know at that point. We were keeping our staff time. So I thought, well, we'll get to 40,000 and then we'll review. Remember, we did that, and I suspended any more transfers at mid-year. The total for the year then was $46,666, interesting. That was 2019, in reimbursement to the general fund. This year, the budget was $15,000, and to my knowledge, that trigger hasn't tripped. And so I'm just happy saying 0. And going forward, 0. So to take that, to bury the past, and that makes some sense. So I will do that. So then we don't have to have the comparison, you know what I mean? Doesn't have to show in the budget.
Any other questions on the financials? All right, then we will move on to the update on Tif projects, which I believe is also included in the narrative in the packet.
Some of this is relating to projects that were started over a year ago and are nearing completion. I'm not going to repeat it. Egyptian Theater's within about 30 days of finally being complete. Plaza de Calb is largely complete, temporary occupancy. Agora Tower just starting. 206 East Lincoln Highway, I put followed from here are a couple of projects that you may have heard about here in 2020. And one was a agreement with a forgivable loan, with a mortgage and so forth, for the Vai family at 206 East Lincoln Highway. Another one was the one that was done for the same kind of a security for 260 East Lincoln, which is the former O'Leary's restaurant. The council has done a few AIP architectural improvement program. These are the little different security here. This an awning, some ADA approved front door replacement, something like that, where it's a modest, maybe $1,000, maybe a couple $1,000. And the expectation there is that the business, whoever the owner is, will remain viable within the first 5 years. And if not, then there's a clawback there. But it's not a 20-year mortgage or I just know the revised parameters for project awards that were reviewed by the council toward the end of May and replicated those here. And finally, the last project that would be considered as part of a agreement with a forgivable loan, and that was 421 Grove, the former Sawyer Auto Import site. They've not been that for a long time, but that's how people regard it, and that was $159,920. So we've gotten away from the percentages and so forth. I didn't replicate the background that went to the council, but it was tightly drawn to the actual EAV, starting EAV of the property, the projection of, I've been visiting with the township assessor about what would count toward an EAV improvement. Paint on the outside wall doesn't rev up the EAV, but other improvements can. A new roof doesn't. And looking at very conservatively and figuring about 20,000 a year, it worked out to the amount that the council awarded. It still has to be proven out, so we'll have to see how that works out. That's it for me.
Other questions or comments about the TIF projects? Okay, then we tentatively are scheduled to meet on July 24th at 1:00 p.m. How does that work for everyone that's here at least?
Can't do anything else. We'll do this.
Holy moly.
Thank you.
All right, then I will entertain a motion to adjourn.
So moved.
Can I get a second?
Second.
Moved and seconded, and since this is a virtual meeting also, we need to do a roll call vote.
City of DeKalb,
Yes.
DeKalb School District,
Yes.
DeKalb County,
Yes.
DeKalb Park District,
Yes?
DeKalb Township,
Yes.
Kishwaukee College,
Yes.
6 yes.
Meeting adjourned.